This is Brian Castle with the May market commentary from FourStar Wealth Advisors. So let's first start with the economy. Some interesting things happened this month. Just when we thought the economy was going to be robust coming into 2015, we're getting a lot of very strange signals. Strange meaning rather negative. The original housing number for starts, down 17%. Now that's mostly based on weather-related issues, but nonetheless it wasn't a positive number. The new single-family homes, however, that's also down 7.8%. Then later in the month, the jobs number came through. On the 4th of April, we had the jobs number come through at 126 versus an expectation of almost double that. So the jobs growth that we've seen, north of 200,000 new jobs every month in America, that has hit a little bit of an air pocket as well. Then on the 13th, the Chinese announced their exports were lower than expected. So the Chinese economy is slowing down, and so a big part of the Chinese economy leads our economy. They buy goods and things, services from us, the cement market and all the other aspects of building and construction and their GDP. So if they're slowing down, it can certainly affect the rest of the world. And then the big number this morning came out was the gross domestic product for the first quarter, 0.2% versus a lowered expectation of 1%. So all this means basically is that we're in a little bit of an air pocket, a slowdown in the economy. The economy is generally seen to be better for this year, but this seems to be, as they say, deja vu all over again. So we're seeing the economy slow down. What does that mean for the growth in the economy and for the Federal Reserve's actions? The Fed has said that they are hoping to raise rates this year because they believe the economy is getting better. So naturally, with numbers like we saw in April, that expected or hoped for increase in interest rates in June is probably not going to happen. So if it does happen and the economy starts to pick up into May and into June and into July, but then maybe we'll see something happen in the fall, but I think it's at least minimum probably a fall expectation. We had a recent meeting with the Chief of Research of the Atlanta Federal Reserve, which I mentioned in our last month's commentary, and they were looking for 1%, and then they came through just after that meeting and said probably about 0% growth, and that's basically what we saw, 0.2%. There will be a couple more revisions to the GDP number, but eventually they'll settle on a number somewhere probably right around 0. So let's hope for better things in the next few months. Raising interest rates is a sign that the economy is getting better and demand for money is out there, and that would lead to more business investment, more business spending, and then more hiring and all those things that all kind of go along in place. So the watchword of this month is a little slowdown in the economy. Let's keep watching and see if things develop. So turning to the financial markets, just when the economy slows down, the financial markets continue to rise. Generally they follow in tandem, but they haven't certainly this month. So all the indexes in the market, the Dow Jones Index, the Standard & Poor's 500, they're all, in the NASDAQ, are all hitting new highs. The big story of this month was that the NASDAQ composite hit a new high. That is a new high since 1999, when I think the number was 5,042 was the high. So clearly, that's a good signal that the NASDAQ has hit a new high. Interestingly enough also, just as the economy and the numbers get really negative over in Europe, that's about the time the markets start to bottom and start to act well. So the international indexes, whether it be emerging or developed Europe or some of the other developed Asian indexes, they're all turning up. We run a dynamic portfolio that has half of the portfolio in European stocks, and that portfolio is doing very well this year, with the U.S. markets up low single digits. International markets are up more than that. So that's always somewhat the paradox is just when the economy is bottoming, that's when the markets have already anticipated that sometimes and they're moving upward. We're not sure if this trend upward in the European markets and then the new highs in our markets will continue to lead to more, but it very well could. We're still seeing very little out of the commodity suite. Oil prices are going up a little bit. Gold had a move, but it kind of faded. So it's still stocks. Interest rates are low, and with the comments I made about the Fed earlier, we're not likely to see interest rates increase anytime soon. So that means there's not going to be much movement in the bond market, the currency markets, the commodity markets. So right now it's still all stocks again. And so we're seeing new highs. We'll see what next month brings, but that's the commentary for FourStar for May of 2015. Thanks for joining.